Good morning, everyone, and welcome to a very special event here at TradeStation. My name is Don Prattle, the Director of Trader Development here at TradeStation, and I want to welcome the world champion, Rob Hoffman. Is with us today for a live trading event using TradeStation tools. We're very excited to have Rob today, and I'm glad that you decided to come to see this presentation. Now, this presentation is for educational purposes only, and all of our symbols and the trading ideas and anything we discuss here is for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business. Active trading is not suitable for everybody. Remember that options trading carries a high degree of risk and may not be suitable for all traders. Please take a look at the disclosure information that I've already posted in the chat panel regarding risks and characteristics of various trading vehicles. So take a look at that. Also in there is a listing of the upcoming TradeStation webcasts. Rob Hoffman is not a stranger to anybody who has paid attention to our TradeStation series of webinars. I want to turn things over to him right now. Rob Hoffman, step up.
Okay, thanks, Don, and good morning to you, and good morning to all of you around the world. Just want to confirm that everybody here can, in fact, hear my voice, and also make sure you guys can see my TradeStation charts. All right. Excellent. Yes to both. Good, good, good. All right. And then one more thing while we're at it, let's make sure that you guys can see little drawing tools on here. Can you see the three little circles? Okay, good. Just want to make sure that those show up for you as we're pointing at things this morning. All right, well, let's get right into it. We've already, so here's where we're at with today. This was set up months ago, and certainly at the time when Don set it up, I'm sure he wasn't aware that we have the FOMC meeting this afternoon. None of us are really thinking about those things months out. So we're going to have that as a little bit of a challenge point today to deal with, because obviously a lot of people are going to be sitting on their sidelines now, waiting for the FOMC. What we're going to be doing is going after approximately 10 different instruments here, looking to see if we can find some movement to work with you on. Yes, we have the crude oil news as well, Caleb, coming out here in about 27 minutes. So we're going to kind of, which will hopefully stir some things up. I actually did trade crude oil live yesterday. Crude oil, Dow, NASDAQ, and we actually did about a total of 4 trades in the total area in the live trade room yesterday morning. So obviously movement in advance of the Fed. So now we're on Fed day. You can see right now the 2-minute chart of the bonds here has just gone dead. So last time I did a TradeStation event with you guys, I was able to gross about $468 here, and you can see that event from last time, $468.75 in the last live trading event that I did here. But we're not sure what's going to happen this time, because we are before the Fed, and you can see right now the bonds have like zero movement. So we'll look at some of the other instruments and see if we can find some live trade there. Any trades I do today will be in my live TradeStation account. I don't even know what it does or what it says when it's simulated, but somewhere up there it must say simulator, simulated, something to indicate. But as you can tell here, again, this will be my live trading account here that I will be doing trades in. I have a very large equity option accounts with TradeStation. I won't be doing anything in there this morning though, because anything I do with you here today, I do want to close out before we get done with the day, so you know exactly what my P&L is before we exit, just like I do in my live trading room. So with that being said, let's run down the pipe and see what's hot, what's not. We did just kind of discuss bonds. Bonds obviously pre-Fed have gone very sleepy here, understandably so. We're waiting on this big piece of information. Is Janet Yellen going to raise rates, or is she going to keep them flat? I think either way, the market's going to be somewhat surprised. because of the fact that there's certainly made a position fairly clear that they are looking at raising these rates. So, if they do, well, then the question is, are they going to continue to raise rates? And then the other question is, if they don't raise rates, why not? So that would be somewhat of a surprise. So I think we're going to have some good movement post FOMC here, to say the least. In the meantime, right now, bonds not looking real hot. As we're taking a look, we do have some opportunity to grow certainly above this 147 area up to around the 148 plus area, but we may not be able to get that forward traction going until after an FOMC. So we're going to keep running down the pipe, and let's see if there's some other things that might be moving here. Gold's getting very close for those of you that have been learning from some of the classes we've done here at TradeStation on my inventory retracement bar strategy. You can see we've got multiple inventory retracement bars, both on a daily basis and an hourly basis. All right, and so we've got a lot of institutional support that's shown itself here in the last several days. So we're right now testing those levels as we're talking. And so I want to see, can we start to break down through those levels and make some new lows that could offer up some opportunities. My BBT Pro Trader Pack, which is in the trading app store, as you can see, has been very generous here with sell side. So I'd like to see that continue and actually pierce through the inventory retracement bars that could offer up some opportunities. Right now, as you can see, though, we are holding. Remember, the Hoffman inventory retracement bars are key support or resistance, if on the upside, until broken. So, but we're going to keep a close eye on that, see if that offers up some opportunities. Crude oil, like I said, crude oil, since we've got the crude oil report coming out here shortly, we're not likely to go ahead and be doing anything with crude at this time. Again, there was some great trading. I shorted it yesterday, was our focus there in the trading room, short side focus. So the at this point, though, we're kind of quiet until after this the news here in about 26 and a half minutes. So we're going to get through that crude oil news, see if that shakes things up a little bit, and then see if we might be able to get some trading done in crude oil. Let's take a look at DAX here. DAX is often a fast mover, and right now the DAX, as you can see, is actually very quiet. Everybody see that? So the DAX right this moment is in a very tight range for the DAX. For those of you that are familiar with the DAX, it usually has a great deal of volatility associated with it. Right now, as you can see, we've actually gone into a very tight range here. So we're going to see if the DAX can pick up in some intensity. The market as a whole is a little bit of a mixed bag of nuts. For instance, let's start with the S&P and work our way over. S&P is sitting here more or less right into my, first of all, it's an inside bar. All right, so it's high and low are contained within yesterday's high and low. Okay, so that's consolidation. The S&P as a whole, right now, very tight range back and forth. Now let's go ahead and take a look at the Russell. Okay. So as far as the Russell is concerned, similar situation, not a complete identical though, because it's not quite an inside bar, but you'll notice that we're kind of encapsulated within the channel. We got some falling resistance above us on the hourly chart. We got some pivot resistance up over here as well, and so what's kind of happening here with a couple of these stock indices, the rally attempt off the 9 o'clock news has since been rejected. So we're not really going anywhere fast on this one quite at this moment. Let's go ahead and take a look at the Dow. So the Dow is going to look very similar, understandably so, as the S&P. What Dow is doing here is basically sitting there right into the speed lines. It's not quite in bar like the S&P, but it is basically sitting right on top of the speed lines, as you can see there. All right, so right in there. And then as you can also see on the hourly chart, we are based sideways and what I refer to as technically damaged. The 15-minute chart, sideways and technically damaged. We also have distribution bars above, accumulation bars below. So right this moment here, for about the last 25 or so minutes, we are really sideways and quiet at this moment. So again, nobody's fault of those things where a couple months in advance when this was set up, nobody's thinking about the FOMC. We're just going to have to work around it. So we have to put our deep thinking caps on and see if we can get any real forward progression going on one of these instruments. So hopefully to the upside, because the path of least resistance right now, we do have resistance right where we're at, but the general least resistance, I don't know about you, gang, but I would rather have it break out to the upside here where we've got room to grow than try to have to go back down through all this support on the hourly chart, all this support on the 15-minute chart, all this support on the 5-minute chart, and all this support on the 2-minute chart. We have a lot less resistance above us than we do support below us. So we do have inventory retracement bars in the immediate backdrop over here. That's a distribution kind. But we have support right below us. So what's happened here, in essence, we are caught between one big fat rock and a hard place. We have support, again, support right below us, the resistance right above us. That's a real important thing to remember here. So we're looking for a big breakout, breakdown. And in the meantime, what's happening in a situation like this where you're wedged in here into all this support resistance, what happens is you get a little bit of a move down, only to have it V-spike right back up against you. You start to spike up, you think, ooh, that's it, breakout, breakout, and then it comes right down on top of you and crushes you. You know, how many of you here feel like that happens to you fairly regularly? You get into a trade, no sooner you get into the trade, it turns right around and goes against you. Does that sound familiar for a couple of you here today? Okay, a lot of people saying actually three words, all the time. Okay, always, why, a lot, yes. Okay, so what I'm hoping to do is share with you a couple of these tools and strategies we use to identify what I call sideways and technically damaged. For those of you that were asking about these, this whole setup right here is in the trading app store. So let me just address that real fast so we can just kind of move back to this and we'll see if we get a little energy going to the upside. Right now, one bar up, but then it's coming right back down again. But if you go to the trading app store here in your TradeStation app, go to trading app store, and then just type in right here in the search bar, Rob Hoffman. Okay. Then you go there, Rob Hoffman's BBT Pro Trader Pack. Okay. So, and there's actually a 3.5-hour training course that comes with that as well. So, that might address some of your questions on that. All right. So, with that being said, let's get back into this. What I was saying. So, notice so far that as soon as we have any sort of very micro pop-up, it's just coming right back down. So we're going to need to see if we can find something that actually has a little bit better follow-through than that. Let's go take a look at the DAX. The DAX, I've been watching this 12,000 level on the DAX for the last several days. I'm a little bit concerned because we have, we basically have a negative divergence taking place here. Okay, so again, we make a slightly higher high. A lot of us jump into the market, not realizing, hey, there's a distribution on the daily chart right behind us, and negative divergences on as recent as a 2-minute chart. So we jump in, and it turns around and smacks us right in the face. Okay, you just saw that on the bond, or sorry, the Dow. And now you're seeing that on the TradeStation, the DAX. So that's real important, gang. That's real important to understand because this is how a lot of us get hit. We don't watch for positive and negative divergences. We don't take a look at resistance immediately in the backdrop, and we're so anxious to get on that next trade. And this is why a lot of us as retail traders lose so much money because what we see is what we want to see. That's this right here. Oh, that's it. Breakout, breakout. We're making a higher high. But actually, if you look, we're making a lower high on some key indicators. Okay. And if you look in the backdrop here, this whole area, so from up here, let's draw this, from the top of this wick, because this is an inverted bar, down to here, that entire area is one big fat layer of concrete until broken. So just fill that whole area in. That is one big fat layer of distribution. All right, one or more institutions not only stopped the market from driving up there, they actually drove it all the way back down. That's important to know. That's important information. Okay, so how do we know they don't have more inventory up there? And that's exactly what's happened now the last few days. If you take a look, if I draw the line across here, every time we got up into that area, look what happened. It got smacked down. It opened up here, got smacked down. Today, we traded up into that area. Has been pulled back again, got smacked down. So there's a lot of inventory to sell up there. Okay. We don't know if it's people that were long from down below that are selling their positions in advance of the Fed. We don't know if it's people taking fresh shorts in advance. We don't know. We don't care, actually. We don't want that to rent space in our head. All we want to know is that the market is actually got a lot of distribution, a lot of selling there. Why is that important to me? When I see evidence of my Hoffman inventory retracement bars combined with negative divergences, when we're making a higher high here, gang, I don't want to be buying this. It's counterintuitive for most of us as traders because breakout trades are very simple to use, right? Hey, if it breaks above the high of the previous bars, go long. It's a very it's a very intuitive thing. The problem is what happens for a lot of us is when we break out, it ends up falling right back on top of us, and you can see that just happened right here. That would have been a full stop loss for the average retail trader, and not a good thing at 25 euros a point. So I hope that goes ahead and makes sense for all of you, which were several of you that answered that. Stop those. No sooner do you get in, it goes back against you a lot. Just using a couple of those key tips like that because it's not just the money we make, it's the money we keep, and we don't want our equity curves like this, where like Las Vegas, where we go to Las Vegas, we're losing some money, then we make a little bit, and we're feeling really good. Okay, this is my comeback, and then we lose more money, and we make a little bit, and then we lose more money. We don't want our equity curves looking like that, gang. Quite the opposite. We want to go ahead and either be flat, slightly up, or up a lot. Okay, that's what we want. Or slight pullbacks, slight down days, right? So we want small pullbacks, flat, small gains, or large gains. Okay, that's what we really want to strive for. So just kind of get that into your head here that when we start seeing things like negative divergences and such, that and distribution bars, that maybe we shouldn't be jumping on that little surge that looks like, ooh, that's it, breakout to the upside. Does that make sense to everybody? I want to try to share with you guys some of these strategies and these tips today that as we're hunting for trades to kind of maybe hopefully re-engineer a little bit about how you think about the markets going forward, because for a lot of you that's exactly what needs to happen, as evidenced by the people that commented that they're always getting in right before it reverses. So I hope that helps a little bit. Excellent. Okay. All right. Bob, I'm using a different program. Those lines are not native in the TradeStation program. I'm using a different drawing tool to present to the group. Yeah. So, all right. So let's go ahead and run down the pipe here, see what's hot, what's not. NASDAQ is the weakest of the stock index futures. Right now, you can see we're at the speed lines, but you look at yesterday. Look at yesterday, gang. We have a big fat accumulation bar. Big fat accumulation bar yesterday. So right now we're at the speed lines. Accumulation yesterday. We've got rising underlying support underneath of us here. Okay. So with the absence of the other three stock index futures selling off, I'm going to be real leery, and this is why it's important to use multi-market analysis. If you're trading the U.S. stock indices, whether it's the S&P, Dow, Russell, or NASDAQ, you really want to try to see some sort of confluence between them. Recently, we've seen a lot of times where like the S&P and the Dow are going divergent to like the Russell and the NASDAQ. And the problem is that usually leads to short-lived markets, as the markets have to arbitrage back into sync with each other. So you have a high probability of being on the wrong side of the trade, roughly a 50% chance of being wrong. So I don't like 50% odds. Okay, so we really want to try to see them in sync. So it's great that the NASDAQ is showing some signs of weakness here. I'd like to jump onto that, but there's no way I'm going to short right into rising support both on the hourly chart, so a key institutional level, and the daily chart, a key institutional level, which not only has the speed lines there, it has the entire inventory retracement bar from yesterday. So you got 2 layers of walls and barriers to the short side on the daily, and then you've got a big fat one here on the hourly chart as well. Okay, so I'd like to see some of the other indices showing some weakness before jumping into that trade. Okay, looking for some confluence there. All right, and yeah, these are not volume charts, Evelyn. So these are momentum-based indicators down below here. Okay. All right. So as we go ahead and let's kind of run through, let's take a look at the Dow here, see if that's going to pick up some steam to the downside. Okay. So as we look at the Dow, back over to this, right now in the backdrop, we're sideways and technically damaged. So I have this channel here. And if the channel from left to right over the last 20 bars, if I can draw a line through it, all right, I call that sideways. And then if we've gone from the top end of the channel and touched the bottom end of the channel anytime in the last 15 bars, I call that technically damaged. And right now you can see the 2-minute chart, not only sideways, it is technically damaged. So let me ask you a question, gang. If I can't even get a trend, on a 2-minute chart, if I can't even get a trend on a 2-minute chart, what kind of trade do I have? What kind of trending trade do I really have if I can't even get a trend on a 2-minute chart? Well said, Mary. Nada. Well, yeah, losing trades, yeah, if you try it. Right, because look what happens here. It spiked up, but this was sideways and technically damaged in the backdrop. Let's just pull that back over here. Okay, we were sideways, technically damaged. There's the technical damage. Here's the sideways. So right up here, goes up there. Bam, right back to the downside. Okay, well, so now here we are. Has the trend actually changed yet? No, the trend hasn't changed, right? We're still sideways and technically damaged. So now we can spike right back up, what we call RTM, reversion of the mean. Is this making sense, gang? We haven't broken into a trend on even a 2-minute chart. I've got no trend here, no trend. I've got a very tight day on an intraday basis, and again, this is, it's Fed day. I would have loved to have been repeating or doing this thing with you yesterday. And at the last TradeStation event, like I said, I grossed a little over $468 with you guys recall on that day. There's my P&L from that session that we did, $468.75. So we're just going to have to right now. I'm not sure I'm going to be able to get $468.75 when we are physically sideways and technically damaged. But I'll work around it the best I can. And in the meantime, at least share with you why I'm not chasing a long here or chasing a short here, because we have no trend and we're just reverting back to the mean, reverting back to the mean. And there it is right now. I just warned you about this a few moments ago. And look what we just did. We went ahead and reverted right back to the mean. Does that make sense? Oh, absolutely, gang. If you guys want to go ahead and be super scalpers and you want to try to get in there for a tick or two and play this little game back and forth, you're welcome to do that. I'm not going to endorse that from my perspective, and here's why. You're welcome to do it. You guys are all responsible for your own trades. I'm not a registered financial representative. I don't hold myself out to be one. So I'm not going to give anybody here individual advice. But here's what I'm going to say to all of you as the masses. Okay, most of you over the time have found out the hard way that if you're sideways and technically damaged, what happens is that leads to people trying to be, channel traders. Okay, and so what usually ends up happening during that phase, by the time they identify they're sideways and technically damaged, a lot of that congestion has already come to pass. Well, so what happens is now they try to scalp a few ticks in there. Okay, trying to scalp a few ticks. Great. So they're making a little bit of money. All right. So now you went from being flat to making a little bit of money. Wonderful. Well, here's the problem. Then all of a sudden, tell me how many of you this sounds like. So all of a sudden the market moves out of that range and you get stopped out, only to watch it go right back up the way you thought it was going to go. So the next time it comes back down, they're like, oh, no, 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 no. I remember the last time I went ahead and I got stopped out. I'm going to move my stop down further. So yeah, I'm going to move my stop down here this time. Well, then it turns around, comes down there, gets your stop, only to go ahead and have it come right back up this way. So now, next thing that happens is it's like, I don't believe this. They got me twice and it did go back up just like I thought it was going to. So now the next time it comes down, it's like, forget that. They got me the last time and the time before that. No way. I'm not going to put the stop out there because I know as soon as I put my stop out there, it's going to go right back up. So you don't put a stop out there, and then that's the one that goes and goes and goes against you and then becomes the huge loss. Does that sound familiar for those of you that want to be honest about it? So what ends up happening in this process is you make little bits of money in those little scalps that you guys are asking me about, and then you take a huge loss on the one that gets away. Does that sound about right? Robert W. says, seen 1,000 times. Paul P. says, triple yes. Yep, and so lots of agreement there. So with that being said, that's what ends up happening to a lot of people that get themselves into that situation. So you're welcome to do it, but I'm going to be honest, that's going to usually end very badly in the big picture. So look, we have costs, we have expenses, we have platform fees for these data fees, different types of things that are expenses to us out there. And so you're not going to make your millions, so to speak, being a scalper for your one or two ticks in the environment, unless you're a machine. So or doing really heavy size. If you do really heavy size, even a tick or two adds up very fast. But then if you have that big loss that we talked about, then with heavy size, that's going to hurt. So with that being said, it's real important to understand. So yes, if you want to try to go ahead and identify the sideways condition and then try to scalp back and forth, you're welcome to do that. The biggest obstacle you're going to find eventually is going to be stop management when you get stopped out, and then widen your stops. Okay, and as you already understood, that makes sense. All right. So with that being said, we are still sideways and technically down on the even the 2-minute chart with this. Let me run down the pipe and see what's going on here in a couple of these. We've got the crude oil report coming out here in about 2 minutes. So bonds, so we'll get through that and see if that will open some crude oil trading. Bonds, look at how tight the bonds are, gang. Extraordinarily tight. The bonds have basically gone to sleep here. Okay, the bonds have absolutely gone to sleep. As we're entering into the U.S. trading session here, pre-Fed. Nobody's putting on a real risk right now as it stands with that. So we'll keep working our way down the pipe and see. I said crude oil is an opportunity, and post announcement and stuff. And we were trading crude oil in the room yesterday, so we might be able to go ahead and do that. You've been reading my trading journal, David says. Well, that's okay. So that's great. TJ, I very seldom ever do that anymore. And it's right, Robert H. It's not sustainable. Okay, and that's what I'm trying to warn people. It'll feel good because you'll get a lot of a handful of little wins, but then bad things will happen. So let's take a look at crude. Let's pull that up here. And because crude oil is going to have that report come out, so of course it's going to get pretty crazy typically after the crude oil report. You don't trade it for the first several minutes afterwards, but I do want to take a look at what's happening. We got kind of a V spike taking place in crude oil right now, and also looking at a couple stock index futures that are we talked about the downtrend really not being a downtrend. The 2-minute was still sideways, and some of the stock indices are picking up in energy to the upside. So we'll see if all that holds post crude oil announcement here. You'll notice I've actually won some trading competitions against people who traded the crude oil into the crude oil news. Gang, from my perspective, that is trader suicide. And so, okay, so the announcement's coming out here, gang. So we'll probably see a flurry of activity there, as you can see right now on crude. So somebody's got an open mic there on the other side. So we'll see if we can figure out who that is. And so as we go ahead and we take a look there, trading the crude oil inventory report during the news can be very hazardous to your financial health, in my opinion. So be careful with that. So we're going to let that settle out for a few minutes. I just want to kind of see the actual kind of first move. What does it do into the first move? You see the first move was up. If you jumped into that long because you had this movement to the upside, you jumped in long here off the news. You're sorely disappointed right now and likely stopped out, since the average retail trader has 12 to 20 tick stop losses in crude oil. Okay, so we'll let that settle out for a few minutes. Let's go ahead and take a look at a couple of the stock indexes.
Rob?
All right, so looking at a couple of these stock indices, getting warmed up to them. Just want to see if this is going to be sustainable post crude oil report. That it's not just going to be a pop, because this is really the same pattern we had, the Russell, same pattern that we had on the crude oil. We kind of popped up, and that's pulling back a little bit. So I want to make sure that we're going to have some sustainability here and see what the highest probability ones are. Which right now looks like it's going to be either the S&P or the NASDAQ. So you see they all have this little pop-up off that crude oil report. Now we're kind of stalling out here, so I just want to see if we're going to get some continuation. Then we'll be looking for some longs. Bonds, still dead as a doornail here. Look at that. No movement at all. Just unbelievable. In fact, you're starting to see now a lot of doji stars. I mean, it's like it's just completely gone to sleep. So that will not be our primary focal point here. All right, so with some of these stock indices, particularly like the DAX, one of the trades I like to do is kind of what I call a thrust pullback thrust trade, where it pushes up, pulls back, and then I go long, looking to catch the next wave of the push up. So we're going to see if we can get some sort of sustainable push going here. So right now the highest probability opportunities, if there's going to be one at this moment, is going to be trying to find long side trades if the setups will occur. So far the setups aren't occurring, but the reason why, as I told you earlier, that I'm focusing on longs is because of the and I'm trading the big DAX. There is an E-mini DAX as well. I'm trading the big DAX. Okay. So to each his own, whatever you guys are interested in trading. Obviously the mini DAX has well, from my perspective, less risk associated with it, but less reward as well. So the getting back to what I was saying here is that the reason why I'm trying to get long sides going in the stock indices is the daily chart is up, the hourly chart has all this support below us, so I don't really want to short into all the support. And right now we're on the 15-minute chart, the 5-minute chart, and the 2-minute chart. We're above the most of the key resistance levels that will cause us heartburn. So that's why I'd like to get some sort of long side trade working here. I'm looking at the S&P, seeing about I get some sort of trade going on in here, and the S&P, the 2-minute chart's not trending here yet, so we're not getting a lot of forward momentum. Momentum is a word that's missing in our vocabulary right now. And I know that's going to be a problem today at this point with the FOMC, but this appointment was, or this event today was set up months ago. I think it was back in either November or December, so as luck would happen, it turned out to be on FOMC day. So we're just trying to work around that. But this is not a bad lesson for people to be dealing with about things like sideways, technical damage, 2-minute trends, so on and so forth. Okay, Dow is still sideways, technically damaged. That doesn't help us any on an S&P trade. Yeah, no, exactly, Jay. I understand. So what's going to happen is when I go to execute the trade, so I got right now I'm using, normally what I do is I follow the continuous contracts for these instruments. But when I go to execute the trade, do you guys all see how right here I've got the continuous contract on the right, but I've got the actual front month on the left? Do you guys see the front month on the left? So when I go to actually execute the trade, I'm going to go and click on over here. So let's say I were going to execute an S&P trade, which right now, as you can see, the Dow, look what's happening with the Dow. It's still stuck in my sideways technical damage situation. This is great news, or this is, well, not great news, this is great information for you guys to be absorbing during this event with us this morning. Because not just the money we make, like yesterday, we were firing off like 4 trades in the room, and I try to go back and show you a little bit about that from yesterday. But it's also money we keep, right? So you got to make it, but then you got to keep it. There's 2 different things there, all right? So, and we get so focused on making, we forget about keeping, and then we end up turning that equity curve upside down and making it look like this, because then we start taking bad trades. All right, so but anyways, that's why I have the front month and the continuous contract. I'd like to look at the charts with continuous contract, but when I go to execute the trades, then I'm doing them on the front month. So you can see what's missing here is momentum. We're not really getting pullback thrust. We're just kind of slowly oozing up here a little bit. I'm on the DAX right now. Trying to see if we get something either along in the DAX or the S&P. The S&P, though, is unfortunately just along with the Dow kind of petering out. It's just still sideways technically damaged. It's not moving very fast. It's going to be like, if I take the trade there, it's going to be like watching paint dry, it looks like. So again, my favorite trade on the DAX, what's been working for me on the DAX is the thrust pullback thrust trade. So what I do is, like I said, the market spikes up real fast in the direction of my trend. I get my blue momentum, blue core trigger, blue fast trigger, and that. Get a bunch of that stuff cooking here, and then it pulls back. I go long, and then look for the thrust. Okay, that's the trade that's been working best for me. With the DAX. So as you can imagine, then part of what I'm looking for is a thrust, and we're not getting a thrust. And the S&P, as I'm watching the S&P here, which I'll show you in just a moment, is petering out as well. We're not getting follow through. Donald, you'll have to check. The question was, are there transaction taxes on the DAX? Well, just remember, the DAX is going to be traded in euros. So if you're a U.S. person, you're going to ultimately have to convert that money back to U.S. dollars because it trades in euros. So it's 25 euros per point in the big DAX. So anything you trade that's in euros, you're going to have to. So you're going to have exchange fees. Potentially, there's going to be an exchange risk depending on the size of what you're trading. You always got to remember to go back to your broker and say, hey, convert that to dollars for me. All right, so I'm watching the S&P, I'm watching the DAX here. Again, follow through is absolutely missing here. Take a look at the S&P. So we just got an absence of market energy. Looks like the market's kind of waiting on the Fed because it's a pretty big announcement today since the expectation has really been raised. So we're kind of working through that. I kind of have it set up with Don that I don't have a standing order. I'm not going to necessarily just say, well, I'm just doing this for an hour, gang, and then we're done. I'm going to try to, as long as I feel like there's a legitimate opportunity to get a trade, I'd love to go ahead and repeat what we did at the last TradeStation live event where I grossed the 468.75. I'd love to go ahead and repeat that with you, or like yesterday where we had 4 trades in the live trade room. But unfortunately, today's just kind of a little bit more of a tough day. So, but we're going to go ahead and try to work through that, and also, kind of help you understand what I'm seeing and why I'm not jumping on this and getting caught like many of us would normally get caught going long on the big green bar, only to have it come right back down on top of us. Okay. So let me run down the pipe here. We are still stuck. It's like it hasn't even moved. Look at the bonds. Look at how tight the bonds are getting. These are 2-minute charts, and we're just not moving. That's for those of you that are bond traders, you know that usually happens later in the afternoon. But this time of the morning, we should not be having that. It's clearly FOMC related. There's just no disputing that. That should not be dead like this yet. So, some of my biggest P&Ls lately have been in the bonds. Okay, so going back to gold. You guys remember a little bit ago with gold, I told you that we had a bunch of accumulation bars, my Hoffman inventory retracement bars down below. Well, look what happened with that. We went ahead and actually stalled at those areas I warned you about. Remember, I said I want to break through these, then I would be looking for shorts, but they had to break through. Show me that one or more institutions that's not only stopped gold from going down, but actually drove it up. Show me that they don't have more inventory to buy when it gets back down here. Well, guess what? They drove it right back off those levels. So, as you can imagine, no short at this point. No, John D. It's not an automated system. Basically, what the trading app is basically exactly what you see here. It's these indicators right here. So it's the same tools. It's called the BBT Pro Trader Pack there, and so it's the same tools I'm using to make all these determinations on momentum, forward energy, stochastic spikes, all these different support resistance levels that make up my determinations of speed line continuation trades, the the channeling, what we call sideways and technical damage, all those different things. And then it's got a 3.5-hour training course on using those. I don't sell black box systems to people. I don't want a bunch of mindless robots. And black box systems, unfortunately, as many of you have found out the hard way, from these they may work for a snapshot in time under a certain market condition, but then when those market conditions evaporate, so too does their black box system. So I want to teach traders to actually be professional traders, to be serious, full-time traders. That's a goal that I'd like to see for people, not to go ahead and turn on a mindless black box system and hope when they wake up in the morning, or hope when they come home from a second career, that they didn't lose a bunch of money. All right. So crude oil here. Unfortunately, crude oil, normally crude oil after the first 15 minutes, which we've just reached that point, is where I'm looking to get, aggressive in trading it. But you can see what's actually happening with crude oil today is we're actually consolidating. We're getting tighter ranges. So here was the spike up on the news. Here's the spike down afterwards that stuck it to the retail traders who jumped in the long. Then it came back up again to make sure they wiped out the shorts. But now it's just sitting there sideways, getting tighter and tighter. So it may break down again, but right now it's getting tighter. So until it starts making a move there, kind of on the sidelines for the moment. But we're going to keep an eye on it. Let's get back over to that S&P. All right. Well, it'd be no fun if they made it easy today. For all of you that were at that last TradeStation live trade event that I did, it's a little bit easier, wasn't it? Not an FOMC day. Bonds were moving. Jumped on a nice bond trade. So that was nice. Right now, though, as you can see, as I've been warning you, the U.S. stock indices are sideways and technically damaged. And what did we do? We had the big green bar, and now we've just fully RTM. We completely erased that gain. Can some of you now see that all responded earlier about how it seems like no sooner do you get into a trade, it seems to always go against you? Can you see just this one tool, this one tip, this one strategy of mine can save you an unbelievable amount of grief potentially by going ahead and not chasing after the big green bar when we're sideways and technically damaged? This is exactly the scenario I was warning about, which is exactly why I hadn't pulled the trigger yet. Yeah, it's pretty powerful stuff. I do like on oil as well. I do like the thrust pullback thrust trade. Yes, so the thrust pullback thrust trade is usually on fast movers. I don't tend to use it as much on the S&P of current. I mean, back the S&P in the early 2000s, then the thrust pullback thrust was a viable tool. These days, with the arbitrage and such on the S&P, it's it's just a few degrees more aggressive than the bonds. It's kind of like the Eurostoxx 50 versus the DAX. The DAX is the Wile E. Coyote, and the Eurostoxx 50 is like, well, kind of looks like the bonds do right now. Pretty thick, and not a lot of whipsaws back and forth to work with on minute to minute. So I don't tend to use the thrust pullback thrust with the S&P. That is definitely, it's more for the fast movers like DAX and yes, the gold and crude oil as well. It can be used on. My favorite one, though, hands down, because of the nature of the DAX, is the DAX. All right, so look what happened here. Once again, so we had a push down, got reversed, pushed up, got reversed, pushed right back down. Complete sideways and technical damage, not just on the 2-minute chart, but on the 5-minute chart, the 15-minute chart. The hourly chart. So a lot different kind of day than the last live trading room type event that I did with you guys that came to that. Um, and a lot different than yesterday. Yesterday, and I'll go back and show that in a little bit here. Some of the trades that we focused on yesterday, I took live in front of people. They were trending. They were trending markets. Crude oil was trending short. NASDAQ was trending short. The Dow futures were trending short. Those were the big three that we focused on trading in the room yesterday morning. So right now, I can't seem to get this to shake itself off, off the dime. Just does not want to follow through. So the DAX is kind of the tallest opportunity here of this bunch, but the problem is it's not really giving me my thrust pullback thrust trades. It's kind of doing this slow creeper bleed to the upside, and that's not normally how I like to trade the DAX. So what's basically happening here, we've had these inventory retracement bars here, and then it has just a few ticks pop through them, and then is retreating, and then trying to re-challenge them. It's a very slow bleed type situation here. And while it is definitely the best overall performer, it is definitely flawed. For instance, negative divergence right up here. The price action, not wide range spike, intraday intrabar pullback for me to go long, and then resumption. So we're missing a couple elements here that make the DAX. And the DAX is not something you really want to fool around with. The DAX, you can make a lot of money or lose a lot of money very, very quickly with the DAX. Also, TradeStation and all brokers are going to require a much higher margin for TradeStation, or for DAX, for the full DAX. DAX Mini is obviously much smaller compared to the full contract, but just can't get that forward energy through the inventory retracement bars and get some wide range thrust pullback thrusting. So let me take a look here. I'm going to stay on a couple of these other charts. So right now is probably an object lesson in pointing out a couple of the areas of why some of you have had a hard time with trading, not respecting the trends and the quality of trends, and trying to scalp back and forth in a congestion area versus then suffering bigger losses. And that is a piece of the puzzle as well. So if you take the last time I did this live event with you guys where I made the money and all the trending and everything else we took into place, and then you take the concepts from this one of where to avoid the unnecessary risk and losses, that can make you a much more well-rounded trader. Yeah, I'm actually on the EC right now. So Clyde, what do you think you're seeing there? Because here's what I'm seeing. Right now, Clyde, we've got a bunch of falling resistance coming down on top of us. Okay, see that? Got a lot of resistance coming down on top of us. And all of you that have my BBT TradeStation app here can see exactly what I'm seeing. So, you've got a bunch of resistance right on top of us. You see it? A lot of it coming down. And now look what's happening as I'm talking here, Clyde. So what we have here is what I refer to as a kill zone. We have some rising support underneath, falling resistance below. Rising support underneath, falling resistance below. That's called a kill zone, and we expect whipsaws back and forth in that range. So if you're thinking about a long here, there's a good chance it's going to reverse on you. Once you get down to this area, if you're thinking about a short, it's a good chance it's going to reverse. It's got to break down from that area, Clyde. And it looks like Don just put the link into the BBT Pro Trader Pack on TradeStation there. So I'd encourage you guys. It's a 3.5-hour training course, and this is not a sales presentation. This is just meant to be a live trading event. But since there's a number of people that keep asking about the indicators, I encourage you to get access to the indicators there. If you're looking for a black box mindless system, though, it's not for you, gang. I just, for me personally, Rob Hoffman, I just don't believe in those for the average small lot retail trader. And so what I do believe in, though, is you guys being really well-rounded, professional-minded traders. And that's what I want to instill in you guys today. Um, and like I said, last event we did, we just made money. Wonderful. This one, we're keeping the money in our pocket. And that goes back to that equity curve, at least for the moment. That goes, we want to either be flat, make a little, make a lot, or be flat or lose a little, and then make a little, make a lot. Okay, we don't want to get those big losses. All right. So, and look what's happening, Clyde, as I'm talking to you about this. Let's go. It's continuing to push back down. See it? Did that help, Clyde? That makes sense to you? Excellent. Good deal. All right, so let me keep running at this. So bonds are still, I mean, it literally looks like the bonds are like stuck. They're absolutely insanely stuck. Those of you that trade bonds, you all you can do is look at this and say, not surprised because of FOMC, but wow, right? So this is clearly, unquestionably, an FOMC related issue. So let's get back over here to the other stock indices. Remember I told you about the NASDAQ? The NASDAQ here was kind of off on its own. Remember we had the accumulation bar, we have the speed lines, we have the hourly chart, all rising, right? And buy side. And so look what's happened since then. We've pushed up only to pull right back down, but we're still holding that area. So all we have right now is these really micro scalp moves. And from my perspective, like, just think about that last, TradeStation event that I did with you here, right? That wasn't a micro scalp. When I traded the bonds with you guys, it grossed to $468.75. That was not a micro scalp, right? So we don't want to go ahead. I don't want to get caught up in that. Okay, we're still holding that support, as you can see right now. It's definitely very important, to say the least. All right. Be no fun if they made it easy, I guess. Today. The Dow sideways, technically damaged on the 2-minute, 5-minute, 15-minute, hourly. So all we're doing is meandering back and forth. Think of it this way. A nice takeaway for this. If you can't even get a trend on a 2-minute chart, what kind of trend do you have? That will, really help you. Hopefully, one little snippet. And I know this isn't like being in my live trading room every day. I'm just trying to give you guys a handful of snippets for takeaways in this event here. But I'd sure love to get a nice trade-off, show off the power of TradeStation, in addition to helping me stay out of bad trades. Be nice to see me, but that's based on Mother Market here. Let's go back to gold. Yeah, see gold. Look what's happened here, gang. More accumulation bars have locked in. More accumulation bars. So those areas I warned you about earlier have just festered into additional accumulation bars on all time frames. Okay. And look what happened here with crude oil. So we'll see if crude oil now wants to pick up and play nice in the sandbox, get a long side trade out of this. But look what's happening, gang. Take a look at that. So all of a sudden, crude oil is just chopping the heads off of people, just chopping people's heads off. The 2-minute is sideways and technically damaged. The 5-minute is sideways and technically damaged. The 15 and the hourly are sideways and technically damaged. So no sooner does it look like the world's greatest short right here with the big red bar, the same bars that get many of you trapped into the trades. Whoosh. Just looking to see if this is going to become something a little more significant. Get some sort of follow through. We got some key resistance on the daily chart for crude oil. It's nice how they ripped everybody's heads off. That moved back over 50 ticks. That's more than 2.5 times the normal average retail trader stop loss of 20 ticks on crude oil. So they did a nice job of ripping their heads off. And I want to see if they're going to have any follow through or if it's just going to revert back into the mean here again. But in just this short time that we've had together, as a build on to the last time where we were able to already have some great bond trading, does this make sense? You know, as we're looking for continuations, you know, and where we have these sideways trends, how, you know, that can get us in trouble. Okay, so I put in. I've got an order out there at 48.20 to go long on crude. Okay, they went ahead and they filled that. So I want to see if we can get a forward momentum going on this. So you see how fast TradeStation puts the orders in, which is nice. So they had the nice reversal off the lows over here, and now we're just trying to see if they can actually drive this up. We've got some distribution up above still, but since we had the nice reversal here, pushed up, pulled back, I want to see if we could actually get this to have some sort of follow through. In the big picture here, like I said, we're sideways technically damaged. We've got some daily resistance, but I want to see if we could go ahead and get a little bit of follow through initial pullback back up here, since we're on a inventory type day. It's hard with the lack of trends here to get any real forward momentum, as we've been talking about all morning here. All right, so we're pulling back into that channel here again, it looks like. So this is the issue with going ahead and trading with the sideways market. We're trying to build up some support. We got some rising speed line support coming up through the channel. So we had a little bit of a pullback. I was pretty aggressive and not going ahead and waiting for a deeper pullback into the channel if I really want to play the channel play. But nonetheless, these are the issues that we're talking about. Trading the sideways, pretty tough. But I wanted to see, since it was nice that we did go ahead and push up this far, we did pull back. Wanted to see it wasn't a true thrust pullback thrust. We're trying to get a little something done. You saw how fast the TradeStation app went ahead and processed the order, which is great. Getting in and out with TradeStation is wonderful. I'm kind of watching the channel right now and see if we're going to be able to continue to use that as support for this trade. So taking a speed line continuation trade in this case would have proved to be a much better entry. But the speed line continuation trades are explained in the Pro Trading app indicator that you guys were asking about earlier. So had I gone ahead and taken the speed line continuation trade, I would have actually gone ahead and had a much better entry on that. So turns out in hindsight, I should have gone ahead and just taken that that trade there. So that's all right, gang. Put it out there live. So we did not go ahead, and I didn't flatten the trade there. I probably could have, or maybe even should have. One could argue. Since I didn't take as good of an entry as I could have, but I was looking to see that if after that recovery, then they would finally drive this thing through, because we did have this opportunity for some underlying momentum here. So we're testing the channel here again. We bounced off the speed lines the first time here. Again, this is live. This is how it goes. That's why we do it live in front of you. What would have been better? Hindsight's always 20/20. The speed line continuation trade. That's what would have worked best. Didn't go ahead and get that done. So. With as explained in that 3.5-hour course that I do for you guys, speed line continuation trades are definitely a small lot retail trader's friend, in my opinion. And because what can happen is then you can take the trade near the speed lines and then have a stop right back behind the speed lines. So we still have underlying momentum and market energy, but we've got some resistance up above us. So unfortunately, that momentum is just not coming through. It's giving me opportunities to scratch the trade. And there's nothing wrong with that. I've certainly scratched my fair share of trades. But I was trying to give it a chance to see if this, because yesterday we had a really nice spike up. Now, interesting, I made my money on the short side earlier in the morning on crude oil, but then we had a really nice spike up on crude thereafter, and we had kind of a similar spike here a little bit ago post crude oil announcement. So I was looking to see if we might be able to get a continuation following through, but we keep digging into the channel here, and if it doesn't go ahead and start working soon, then I'm just going to go ahead and cut it and see if we move on to something. But there's this underlying momentum here, and so I've been given it a chance to try to work. Usually I'll just go ahead and scratch and kind of move on to the next thing a little bit faster, but the problem is there's not really much to move on to today. So admittedly, I went ahead and just kind of held this, even though the speedline continuation trade would have been the better entry, as I said. And if you guys, watch my speedline continuation trade video that goes with this, you'd understand that that's, well, you can even see how, pulling the speed lines, that's definitely the better entry. But today there's not much else to work with. So one of the and if your trading plan says no sideways and technically damaged or type trades, you wouldn't be in it. But with the speed line, that's a good opportunity. I played it a little more aggressive than that because there's just not much more to work with. So that's fine. We're just, like I said, truth be told, I would have scratched it up here if it didn't work when I wanted it to before. But since unfortunately there's not much else to trade, as we looked at with the bonds and everything else, it's just kind of like I instead of scratching this one and moving on, which here again might have been a better play, but because of this event today, I was trying to get something done, and that seems to be hurting me rather than helping me. So we're still kind of hitting into all those different speed lines, but again, we keep eating away at that. So see how we keep hitting it and then bouncing off. So there's a whole bunch of support in there. So I didn't take it at the high. I waited till it pulled back. Okay, so I waited till it pulled back, but I didn't wait till it pulled back into the speed lines. I would have been much better off had I waited till it pulled into the speed lines on that trade and then trailed the trade up. But again, trying to work with the very limited market at hand. There's just not much moving here. Yeah, so we're just kind of pulling up into falling resistance on some of these. So what I'm watching very closely here is how we respond around the speed lines. Just as the speed lines were support on the pullback back down, I want to see us get back above these speed lines. If these speed lines start coming down and act as resistance, that's not good. We want to get back above those speed lines. So here again, kind of, illustrate the point when you're sideways and technically damaged, even with a thrusting market, that thrust can peter out, unfortunately. All right, so we're going to look to see if we can get back above these speed lines here now. So you see it's a battle royale here between the support levels below, but those speed lines are now somewhat acting as resistance. So again, if I would have stuck to my normal rule of just scratching it, if it didn't work, that probably would have been good. But normally that's because I'm looking to go on to the next great thing. Well, the problem is there is no other great thing right now, unfortunately, with this market as it is. So it looks like the speed lines are acting as resistance, unfortunately, gang. So just not going to go ahead and be able to get that, win that I'm looking for here, it looks like. Oh, don't feel bad for me. There's nothing to feel bad about. Look how fast that turned around. It's just that, there's a lot of support underneath of here as we're talking about. But the speed line's got to become support again, not resistance. So again, I just made a tactical error with the sideways market. Should have waited for it to pull back a little further into the speed lines and then had a stop back behind there. And that's what I normally teach. Didn't follow through with that this morning. That's how I normally would look at it. But given that this was the best of the bunch, went ahead and went with what we had here. So you see we're still holding into those support levels. It is nice to see that we just made a accumulation bar underneath of here. So we'll see if now those institutions want to drive this up. We had the accumulation bar over here. I don't know if you guys can see my cursor over here and that, so it'd be nice to see with this extra one here if they'll follow through. But see, we're dipping back down below the speed lines. We want to be back up above those speed lines, gang. So what I always talk about, what in any trade I do, I talk about, for those of you that are in my live trading room, you guys know I always talk about what I could do right, wrong, and could do better. Since this was sideways and technically damaged, probably better that we stayed away from it. We talked about that on several of the other charts. But since we had this thrusting and we had a little bit of a pullback, I didn't wait for a full pullback. I was very aggressive. If I had waited for a full pullback, that would have been better. Okay, so unfortunately, I'm just not. We're holding the support, but we're getting a lot of volatility in here. So, if it doesn't go ahead and work soon, I'm going to have to, cut the trade. I'm watching the support levels here. But I try to keep the stops or the losses real tight these days, and just doesn't look like we're going to be able to get done what I want to get done here, unfortunately. Okay, so I have a sell order in there at 47. So made a couple of mistakes with the trade that I could have done better. Again, what were those things I could have done better? Waited for if I'm going to take a trade in the sideways market here, gone ahead and waited to, okay, so let's see, trades might take out stop here. Okay, so there we go, when I took out stop. All right, so what I could have done better with that, and by the way, let's see if this actually becomes then a short opportunity. So what I could have done better with that is gone ahead and waited for the speed line continuation trade. That's what we could have done better with that. And then as this was coming up here into the distribution bars, or gone ahead then and put a trailing stop in there. That's what I could have gone ahead and done better initially. Then when it came back up and it pushed up here, I could have gone ahead and just flatten the trade. But again, I didn't flatten the trade as a byproduct of being in the special event today because there isn't much else happening. Crude oil, as you can see, is one of the few things kind of moving around. and so had to go ahead and keep it kind of tight there. All right. Yeah, so yesterday I shorted crude, and it was in a downtrend there. So I did not take the spike up, but the spike up was ferocious, and I was looking, and that kind of impacted my feelings about it today. Like, okay, we pushed up, we pulled back. I want to see if it would actually pick up in intensity to the upside there. Should have waited for the speed line continuation trade because that would have mitigated this. So if I took and the reason why I keep pointing that out, gang, is because if I'd taken the speed line continuation trade here, then the stop loss is usually for me just a handful of ticks back behind it. So it either works right away or you have a real tight stop loss. So that would have kind of shored up my risk on the trade. But so yeah. So those are a couple things could have done a little bit better on it, but that's fine. So now let's go ahead and see what else. I mean, crude, it's just the 2-minute is sideways and technically damaged. It's kind of bebopping back and forth around here. So. I only trade real live money. Only trade real live money. So that's real. I'll leave the demo account trading to other people. All right. So what happened here in the end, going back to this, if you look over here, what ended up happening was the speed lines became resistance. Does everybody see that? So we had the speed lines on the way up here as support. And so when it hit support, it bounced off. But then we started getting closes below the speed lines. And that's why I said over here repeatedly, it's got to get back up above and it's got to start closing above there. And it didn't. So that caused me grief. Okay. All right, so we're going to keep an eye on that. Let's take a look here. So the long failed to follow through, so I'm looking to see if this might become a short. You know, if the buys don't buy, maybe it'll be time to sell. Yeah, you're glad. You're very welcome. I'm sorry. Very, very happy to go ahead and walk through this stuff. It's a good learning opportunity, and hopefully it reinforces some of the things I said. I say there's a couple things the only thing I regret, by the way, I'm going to go ahead and put an order out here to short at 48.45, looking to see if we can get some follow through here to the downside. So the only thing I regret is the not flattening the trade when it didn't follow through when it went back up above. That's the only thing I regret about the trade. Okay, so the that's the only thing I could have really that and the entry on the speed lines. But when it came back up, it didn't break through, and I didn't take the better trade on the speed lines. Going and closing the position would have made more sense. So what's happening here is we just got a 2-minute chart that is not it's not trending. And so looking to see if, since the buys didn't really follow through with the buys, if we might turn into a sell. So certainly, especially if you guys were like with me the last time, not some of my better trading here today, but that's okay. This is the real world, and I'll put it out there live, which most people won't do. It's great to discuss trading, but then you got to actually, there's the real world of trading too. So right now I was looking to see if the speed lines would go ahead and hold here, and then start to roll back over, and that's not happening. So now it's pulling back up off the thing. So I'm getting whacked around here a little bit with the 2-minute chart. So I keep coming back to that, but unfortunately that's the real deal of what's happening here. It's just not. There's no real continuation as part of this. There's no follow through. Well, yeah, Mary, my thought would be you'd probably want to see my live trading room on a daily basis. Like I said, this is completely the opposite of what yesterday was. Yesterday was like we were just getting into those trades and they were just working. And of course, the last time, like I said, the last event that I had here with you guys, we went ahead and just got a nice clean trade, but we had trending. And today we just don't have the trending, unfortunately. What we've got is a sideways and technically damaged mess, unfortunately. And we're struggling to get follow through because of that. So for the average small lot retail trader, it doesn't make sense. And I kind of said that. I don't really consider myself the average small lot retail trader, obviously. I trade some pretty big sizes. I'm not doing that, obviously, here, but I trade some pretty big sizes. And so, my intent is that, any tough spot this morning, I'll have, recovered this afternoon after the FOMC. But at the same time, this is the real world, and when we're in this trade, then it gives us real world food for thought and discussions. So as I'm sitting there talking about, hey, the average small lot retail trader trading the sideways and technical damage, maybe that will make more sense, and be like, yeah, okay, I think I'm getting it. Maybe I should stay away from that. And this feels like I said, there's just no follow through, gang, as you guys can see. So here again, it gave me a chance to scratch that one. The real operative word here is we just can't get follow through. But that's because everything's sideways and technically damaged. So certainly this isn't how I win trading competitions around the world. That's for sure. But we're trying to make the lemonades out of lemons. Oh, there's no doubt that I'm pushing, and I've been very honest about that. Like I said, I really want to kind of get in here, and sounds like some of you guys missed the last trading event that I did, and so really trying to get in there and do some more with you guys. But unfortunately, when we set this up months ago, just none of us really thought about the fact that it was FOMC day. So. The big thing here is the speed line continuation trade and the scratch. Those were the big takeaways from that, and unfortunately that just didn't work out the way we wanted it to. And even now, you see, we come down, we're getting into this scratch territory. We're not getting the follow through. It's just everything's a lack of follow through. So All right, so I went ahead and I just scratched that trade. That's what I should have done the last time. And we're going to do it right this time. We're going to get back on track there and just do what we're supposed to do. So I just went and pulled it out. That's what I should have done the last time, up over here, as I said. And so we're going to go ahead and kind of get back on track and do it the Rob Hoffman way and not worry so much about being part of a special event. So because normally the 2-minute chart sideways technically damaged when we're trading with the public groups, I won't trade that. This particular one I chose to turned out to be not the best choice. The if I was going to take that, I should have taken it closer to the speed lines. We didn't, and then scratch it if it didn't work. So made a couple of mistakes there, and now we're just trying to get back on and do it right or not do it at all. Yeah, I suspect I'll be able to follow through this afternoon post FOMC, and then show you how we went ahead and in fact, all of you guys should go ahead and if you're not already receiving my nightly videos, my nightly free video, you guys should receive those, and I'll do an update for you this evening. Because what we'll do is, my goal is, unless a good setup comes up here, to just keep it close to the vest here until after the FOMC. Give it about 15-20 minutes or so, maybe 30 minutes after the FOMC, and then look for trades accordingly. Let me go back over here to see what's happening here on these other markets. All right, so bonds widened out just a hair, but not by much. They're still, and when you have these kind of bars like this in the middle of the regular U.S. trade session, the best thing to do is stop trading the bonds, because that just means it's that tight. Where your bids and your offers, it's basically staying there for 2 minutes. That's not good. So we're going to stay away from that one. Let's go take a look at gold. So inventory retracement bars here on gold, same thing. Lots of accumulation bars down below. And we talked about those earlier, and we've just held those levels. We kind of came back down, dipped towards them again, and then the market found its support there. So the gold is not trending. It's kind of paralyzed until the FOMC as well. Yeah, the indicators are in the trading app store, and I know that he posted the link for them earlier. But yeah, you can see how it goes ahead and is really helping identify all these support levels and resistance levels, the speed lines, everything else that's taking place there. Thanks, Don. BecomeABetterTrader.com. Don actually put that link in there for you as well, right on the front page. It should offer you to be able to sign up for those. So crude oil just cannot get the forward momentum going to the downside or the upside. The 2-minute chart is sideways and technically damaged. So I'm proving my point in spades here. The 2-minute, 5-minute, 15-minute, and hourly are all sideways and technically damaged. And so I'm proving my point here, unfortunately, in spades. Take a look here at the NASDAQ. So I'm looking through what else. Got a lot of resistance for like the NASDAQ where it's at. A lot of falling resistance. Let's go back and take a look at the DAX. But it looks like the DAX fell away from those levels that I was monitoring earlier. We were looking at it up here, and you see, remember the DAX is a thrust pullback thrust instrument. You see we lost our forward energy here. See how we're magenta? See, when we're blue, we really want to see that blue, right? We really want to see that blue on the momentum here. And we're not seeing that. We're seeing magenta, so an absence of momentum. And every minute that goes by as we get closer to the F1C, we've got the market just, it's likely to get more and more quiet. So if you guys want, okay, great, Mary. Well, I said I'll give you guys an update tonight in the videos as well. So I said, if I had to guess, what will end up happening is I'll end up waiting until after, especially since these markets